Morena, and welcome to Meridian's quarterly operating results call. I'm Mike Roan, I'm the CFO at Meridian, and with me is Owen Haxton as usual. Owen's our investor relations manager for those that haven't met him. If you haven't, I'd be surprised. It's a regular call where we share some thoughts and insights on the previous quarter, something we do semi-regularly between our interim and annual results announcements. Format's pretty straightforward. Owen and I mix and match commentary on climate, hydrology, generation, performance, wholesale prices, electricity consumption, retail, a little bit on operating costs, capital spend. Do it over the next 10 to 15 minutes or so, and then we'll take questions. Given it's general, we steer clear of anything related to financial results. But if you do have a question, if you've attended this before, hopefully you remember, but if not, drop them into the Q&A. If you give us name and the question, that would be appreciated. And if you could do it as we go, because there's about a 20-second delay between what you're hearing and I'm talking. So if you don't get your questions in a little earlier than you might expect, then we might inadvertently cut the question off. But for now, I'll hand it over to Owen.
Mike, just a little bit about weather, climate, etc. We're through the 2023 winter, hopefully, and overall that was a winter that was warmer than average, and that was despite seeing record August demand numbers. That month was notably cold. In fact, it was the coldest August in the last 7 years, and it was also the first month of any month since May 2017 that New Zealand has experienced colder than average temperatures. Through winter, rainfall was generally lower than normal across the country. The clear exception was the lower South Island, fortunately, where we had a number of rainfall events pushing totals well above average. And towards the end of winter, start of spring, we've seen the weather take on typical El Nino characteristics. That month of September saw record wind generation in the system and some more sizable rainfall totals in the South Island. So we're firmly in an El Nino weather pattern, and there was forecast as a very high likelihood of strong El Nino conditions continuing all the way through summer. Now, while variability is always a factor in the country's weather, it's expected that we'll see more and stronger westerly winds than normal, and certainly what we've seen in the last couple of years. That'll push temperatures in the east coasts or the eastern regions of both islands up, with notwithstanding that, reasonably dramatic temperature swings, particularly through spring, from unseasonal warmth as Australian air mass makes it across the country, and colder southerlies like we've got in Christchurch today, and all of which probably suggests normal rainfall in the north and east of the North Island, and above average rainfall in the west of the South Island, which is where Meridian's main catchments are. And all of that is a marked difference to the La Nina dominant weather pattern we've seen prevalent through particularly summer, spring and summer and autumn for the last 3 years. It's not a slam dunk though, and to highlight weather variability, we had above average inflows in Q1, but they were quite a long way off where the inflow totals were for the first quarters of the preceding 2 years. In fact, those 2 years of preceding Q1s were the second and third highest quarter Q1s on record, which, when you think about a developing La Nina pattern in those last 2 years, is reasonably surprising. Without quite the same level of quarterly inflows as last year, hydro generation volumes were off about 3% lower. September was really notable in that the country recorded record wind generation, topping out at over 9% market share for the month. And for us, September wind generation, while up on the comparative month, was impacted by derating at our West Wind farm, and that's due to a transformer outage. And Mike will talk a little bit more about that shortly. Look, in respect of demand, certainly the cold August indicated some reasonably high sensitivity of demand to temperature. Overall, Q1 demand was up 0.6% through the quarter. And look, while that's not standout growth, August saw 6 of the 10 highest national electricity demand peaks ever recorded. So notwithstanding the warmer than average temperature headwinds we've seen from demand, there looks to be some fundamentals that support future demand growth, hopefully. And with that, I'll pass back over to you, Mike.
Hey, thanks, Owen. Hey, I'm going to focus a little bit on wholesale prices, which were stronger than they were in the same quarter last year. They're $119 at Benmore, which is about a 70% jump over that quarter in the previous financial year. Shouldn't be a surprise, as Owen mentioned, inflows were a little lower than they were that previous quarter, and hydro storage was on the decline over the first quarter that we've just experienced. It hit 82% of average, or national hydro storage hit 82% of average by mid-September. However, El Nino kicked in, as Owen had mentioned. We've had a pretty dramatic shift, as anyone living in Wellington will tell you, and the strong winds that we've experienced also were driven by reasonable weather events into the South Island. So inflows in the last half of September been particularly strong, and as a result, we've seen national storage lift now first week of October sits at about 116% of average. So reasonable lift in storage. 2027 futures started trading early October. Don't know whether anyone has picked that up or not, but important that we've got pricing visibility out through 2027 now, and shouldn't be a surprise, but 27 is trading at a slight discount to 2026. And while forward prices have been pretty stable in the last few months, they do remain high, and it's clear that there's still reasonable levels of risk priced into those futures. People are obviously thinking about peak load or winter peak loads, what might play out in the gas market as it relates to both storage and availability, when thermal generation might close, what hydro firming options we have alongside the NZAS decisions, and what political regulatory uncertainty we might face. And those are all factored into those forward prices. While those prices, as I said, have been stable, our retail team has remained pretty focused. I think you all know that our retail portfolio is pretty full, and as a result, residential sales and the wider retail portfolio has stayed pretty stable. It's been a little bit of growth in business and corporate volumes, but nothing more so than that, given the position that we started the quarter with was pretty full, as I mentioned. That said, average price growth across the retail channels was up 11% on the quarter, driven by repricing largely in the corporate and industrial markets or industrial segments. Talked a little bit about OPEX. My expectation is that we currently forecast, or the market forecast we've got out there, is 268 to 274 million. It's our full year guidance. Based on forecasts that I see, I think we're probably tracking somewhere around the top of that forecast. Currently, there's plenty of time to go in the financial year, but that's certainly what I see sitting here today, and really similar as it relates to expected capital spend. Is market range was 420 to 445 million was our guidance, and that still looks quite reasonable. The majority of the spend this financial year shouldn't surprise people, as it's focused on Harapaki completion. The civil works are now largely complete. You can actually see behind both myself and Owen pictures of Harapaki. My one's of turbine that's ready to go up, and Owen shows the site more directly. So when we go back to him, you might get appreciation of that Harapaki site. But key point is that you only take turbines up the hill when civil works are largely complete on the site, and Siemens are full speed ahead, standing up the first of the turbines. I think we'd noted that we expected first power to play out sometime in October. It looks like it'll be early November, as we've made some slight tweaks to the way that we intend on commissioning the first set of turbines up the hill, but rather than October, it'll be early November. Other stuff that might be of interest before kind of closing this out is last year you might remember that we had quite a contribution from future contract closeouts. We had adjusted the way we thought about our future market position and portfolio this year, and that resulted in about $34 million of revenue generated by those closeouts. This year we've seen about $18 million of revenue as a result of closeouts. This year that's driven by us moving the position off ASX, and we've taken CFDs with counterparts as opposed to so we've got over-the-counter positions on rather than futures positions, driven more by the prudentials that we were carrying as a result of the ASX transactions that we had on our book to support retail sales than anything else. So, but you know, you might have picked that up. It might be of interest. Second thing that might be of interest is we've obviously got a couple of transformers out at Manapōuri. We've also got another transformer out at West Wind. These unexpected, quite annoying, if I'm honest. Particularly given we replaced the transformers at Manapōuri back in 2015, but transformers underground are something you've got to be very careful with, and the two transformers at Manapōuri were exhibiting levels of gassing that we weren't comfortable with. So the team's working hard on restoration of both the Manapōuri operations and the West Wind wind farm. We expect we'd have one unit at Manapōuri back before winter next year, but the second unit unlikely to be the case for that unit, and we've got a bit of work that we had planned for the Manapōuri site. So there's a third unit there that's been derated while we look at the condition of the runners and the facing plates on that unit. At West Wind, the transformer failed, so the wind farm there is limited to 98 megawatts as opposed to 143 megawatts. And we're in the process of procuring transformers for Manapōuri and West Wind. The West Wind transformer could be the best part of next year, so through 24, say November, December 24, before we get West Wind back up to 143 megawatts. And while that may seem like a long time, anyone who's involved in procuring infrastructure would know that it does take time to both isolate the issue, make sure that things are safe, and understand what the underlying issues were before entering into procurement. And of course, procurement of transformers, both the sourcing of and then delivery of transformers to New Zealand can take some time. So as I say, reasonably annoying. 2 units out at Manapōuri has a wee impact on operations, but not material. And I'd probably say the same thing for West Wind. A little bit of an impact, but not that meaningful, other than we would like that kit back in service, obviously. Hey, last thing that I'd mention probably is the venture that we've entered into with Parkwind. We've signed a MOU with Parkwind for exploration of offshore wind, primarily focused on the Taranaki coast, and to build on the work that has already been undertaken by Parkwind in that location. Depending on the outcome of the exploration, we may decide to work towards a feasibility permit. We haven't got to that point yet, but we are obviously interested in long-term investments and relationships, followed by potentially a build to own and operate business model. We think there's a bit of time to get it right. Offshore wind still seems a little way away for us, but it's something that is likely to add value to the portfolio we've got, and we feel that Parkwind's a great partner for us. So now I'm going to move to questions if we've got any. If you do have one, as I said, make sure you include your name if you can, so that we know who we are answering, and also know there's a 20-second delay between the time you submit that question and when we see it. So I may cut things off. If I do, I apologise now. Otherwise, I'll step to questions. And it looks like we've got one from Felicity. The question is, what's happened with the Manapōuri transformers? Are they covered under warranty? So as I mentioned, Felicity, the Manapōuri transformers exhibited a level of gassing. All transformers gas to some level as the oil is placed under pressure and warms up. But we monitor transformers for level of gassing. The levels of gassing in the two transformers at Manapōuri exceeded levels that we felt were reasonable for those transformers and required analysis. We've completed that analysis. Now we don't feel comfortable returning them to service. Rather, we're looking at our replacement options for those transformers, which is why it'll take us some time to actually bring them back to service. We're still working through with supplier of those transformers to make sure that we capture their view. There's a question here, are they covered under warranty? That's what we're working through with the supplier, is what obligation does the supplier have to help us manage the situation we find ourselves in at Manapōuri, but we haven't landed the answer or that answer yet. We're working hard to do so though. So thank you for the question. Hopefully I've answered it reasonably. That actually looks like all of the questions for today. So one and done. Thanks everybody for joining us this morning. Hope you did get something out of the session that was useful to you, and I will sign us off. Ka kite.